Hello, welcome again to this week's episode of our conversation about Bitcoin mining with the owner and founder of Liquihash, Nic Campesi. Thanks for joining us again, Nic.
Hey, Ro. Good to talk today.
Yep, so we'll jump right in. For my first question, it looks like the price of Bitcoin is possibly in an accumulation phase. Is now the right time to start running a Bitcoin mine around the clock, or how does that go?
Yeah, if we've had a big pullback in hash price, which is, the amount you make per terahash per day. And, look, we are at a fraction of where we were this time last year, coming off of, the China ban lows and almost nearly recovering all that hash to an all-time high. But, people are plugging in miners right now and the price isn't moving. But if you look at history and you look at, we got out of a hash ribbon signal just a couple of weeks ago. I mean, that it says now is a good time to deploy miners. And so, the one thing that I always tell everyone is that, if you're going to keep waiting for an entry point, you're going to get caught flat-footed at some point, and it's going to get away from you, and you got to make that decision then. Are you going to start pushing that capital in at 20-30% higher, because it'll move that fast, that quick, and so that's why we kind of take an approach of dollar cost average to an extent, but it's even with your hash rate, deploy at times where even, hey, do we think it could go lower? Yeah, it very well could. But, right now, historically, if you deploy money into Bitcoin mining, you're going to be very happy.
Gotcha. And I think you just talked about dollar cost averaging. Do you want to explain that concept to our listeners, just in case they don't understand that phrase?
Yeah, my light bulb went off for me a few years back when I started realizing that, just dollar cost averaging a Bitcoin is probably the right strategy for most people. Someone who is a retail investor that wants exposure to Bitcoin, I'd say, set it and forget it, buy X amount a day that you can afford, and then don't sell it and just hold on to it and let that be a savings account for you. With mining, if you deploy capital into mining at the right time by buying miners that are reasonably priced and execute by running them at low cost energy, you're going to beat the dollar cost average strategy. The problem with that is that there's not really a solution unless you're willing to deploy at least I would say six figures. So it's mostly like an accredited investor type of thing, which is kind of what we're doing with, giving people exposures, because really to try to do that well, you're talking millions of dollars to go out and do it on your own. Even at depressed prices now, you're going to have to go buy a megawatt of miners. You're going to have to prepay some power, some infrastructure costs, or if you just sign over all of that to someone else to handle for you, then you're still going to be deposits and upfront cost involved. So you're getting into a high cost, but it's going to beat the dollar cost average strategy. That's been back tested. That's been proven over time. But I think, for someone that's looking to get into the space from a retail standpoint, yeah, you're probably best off dollar cost average. Someone that's, a family office or an institutional investor, deploy that capital into the mining space.
Gotcha. And mining Bitcoin with excess energy derived from sources that sometimes produce too much energy, like a hydro plant that creates too much electrical energy for the grid to handle, appears to be the best way to avoid wasting good energy and adding a secondary revenue source to your energy business, which is an amazing concept. But what kinds of energy sources can run a Bitcoin mine?
Look, there's several. One of the ones we really like right now is people that are venting methane or flaring gas off of a well or some other site. It could be, even landfills that are emitting, that you want to take that and run that through a generator. that right there is a carbon negative solution where you are taking emissions that are way worse for the environment and running them through, a tier 4 generator that is going to be a much better solution in the long run. And that's energy that would have been wasted. Now, there's also solutions where you go in and you say, hey, we have excess power at the hydro plant, excess power at the solar or the wind. That's intermittent sources. And that's okay too. There's kind of a different model of setting those things up. And then there's also the internal. There's people that are just not, they're in a regulated market and maybe they're co-generating power. They're manufacturing something, and then they generate power for their process. And when they don't need it all, they're selling it back to the grid. And quite frankly, a lot of those people are very upset because they're not getting paid a fair market value for the power that they're making. It's much lower. And those people, we say, look, you can become part of the Bitcoin network by plugging in one of our units. We come in, set the whole thing up for you, and you get a higher rate. Now, if you don't want to put the capital in, maybe we work it and run it for you versus you going out and doing it yourself and us managing, maybe just the setup and the back end. And so there's a ton of opportunities for someone that has a source of energy, whether it be, underpriced, undermarketed, can't get it into the market at a fair price, or simply just, something that someone says, look, we believe that this is the future. We want to put our money into something that's not going to lose value. And we see this as a digital pipeline, and we see it as, let's be part of the network and get a higher rate by just plugging into the network.
So you just said that Liquihash, your company, can help people create these mines. So for someone that is completely new to the space, even if they understand the concept of Bitcoin mining, what can Liquihash do to help them?
Yeah, so there's two things. Every project is unique. So we specialize in two real things. It's people that have capital and want to get a great return on their capital. This is someone that, perhaps is a little hedge fund, an institution, a family office, a high net worth investor who says, I see it. This is real. This is something that's been around. How do I get exposure? What our value prop here is that, we're going to beat just you buying Bitcoin and holding it, which, I don't think is a bad deal. But I think that, we're able to give, these internal rate of returns that are in the triple digit range because we've got an edge. We know what we're doing in terms of deploying capital into this space, whether it's energy arbitrage or, buying miners right and operating them, or simply having a little bit better operational efficiency. So that's one side of this. And then we have the person that maybe they're principal to the company that owns the power station, or the person that's the president of the chemical plant that's selling some power back into the grid. But they can't get the capital, but we could come in and still help someone like that because we can match up the capital and put the deal together. And, we can do this from start to finish, whether it's, you get the capital, you get the idea approved, and we come in and do everything and pay you for your power, or it's a hybrid of the two where someone possibly has the capital and has the power, and we're able to put the whole deal together. And then, you can make a decision if you want us to manage it or you want to manage it yourself.
Gotcha. And one question I've been wanting to ask, you've witnessed multiple ups and downs in the Bitcoin market, also known as cycles, right? So who in the long term will be the winners in the world of Bitcoin? Will it be the miners or the traders, in your opinion?
I mean, I think it's the miners. Okay. And that's where I am. I mean, I've I was a Bitcoin investor for a while before I was a miner. I understood Bitcoin. Where it really clicked for me was it took me years to look at mining before I started doing it. Big regret, but look, I don't really have a regret, so to speak, in this space. Everyone's going to end up at the point where it starts making sense to them. That's where they're going to get in. Now, here's the thing: the mining is such a critical part. It's a hyper competitive, razor edge business, and if you look at the largest public companies right now, those were the people that are thinking ahead and doing things that were not necessarily profitable when they started doing it. And that's really the trick, is that you've got to be one step ahead in Bitcoin mining, because that's the route that it's going. Everything is moving so fast in this space. Now, could you be a great trader and get lucky? Yeah, I just think that your success rate in mining is going to be so much higher if you do it right, where you deploy capital at good valuations and stay with it on a multi-year time horizon and simply execute, versus trading where you can deploy capital at the right time and have the right time horizon, and I think do okay, but you're not going to get the same return as if everything's done right in mining versus everything done right in trading. Is it easier to enter a few orders? Absolutely, but it's proof of work. It's work. That is why you get that excess return, is putting in the work. And that's the difference. So, I think someone who's a retail trader, or, someone who just, maybe wants to play around with a small amount of money, then, I think it's, you buy the Bitcoin and you lock it away, because trying to outsmart the market, this market's moving fast and it does things that are very irrational. Trading on leverage is, you're playing with nitroglycerin when you enter into that realm in this space.
Yeah, definitely. And mining Bitcoin with excess energy sounds like a no-brainer, right? It's a clear solution that energy companies should seriously consider to stop wasting good energy and to create an additional revenue source, right? But how long does it normally take to create a Bitcoin mining facility?
Yeah, so I mean, this is going to vary depending on what your end result, what your end goal is. If you're looking for like some kind of large, grid load balance, I mean, you're talking about being in line with everyone else that needs the same infrastructure, parts, and items. So if you decide to go build a large mining facility right now, getting your permits, getting your power purchase agreement, everything that's involved with that, you could be well over a year to build something like that. Now, if you come to us and say, hey, we're interested in, just mitigating this flare gas, I mean, we could be there in 30 days. So it really depends on the scope and size of the project and what the goals are. If we got to go into a harsh environment, that 30 days could turn to 100 days, 120 days. So there are some factors that must be considered at each site. That's why, this is not a buy a box and hook it up type business anymore. At one point, it was buy some miners, plug them in, but as the market is evolving, there's a lot more consideration to take into place at each unique site that will just require some unique engineering.
Gotcha. Well, thank you so much for all your answers today. I think our viewers found this highly educational and helpful. And if anyone listening needs some more information or wants to learn about Liquihash specifically, please go to www.liquihash.com, which is liquihash.com. And again, thanks for listening. We will see you again next week. Thanks, Nic.
Thank you.